everything might start being challenging when you're writing. Okay, but I'll go through it. Let's go through it together then. So it says question 5, 11 marks, 13 minutes. Commence this question on a new separate page, and then you have your extract from the general ledger of Goofy Traders, at which you have your vehicles account with all the balances brought down at the beginning and also at the end. And then you have accumulated depreciation on vehicles. And then you have your realization of vehicles. And then it says use the information from the above, information above, and prepare the note of property, plant, and equipment for Goofy Traders for the year ended 31 December 2008. Okay, so let's go through it. So with yesterday's class, can anyone please give me the format of a PPE that I drafted for you guys yesterday? So here we're doing for vehicles. Can you give me the format? Can you give me the format from yesterday? We said to start off with what?
With the opening balance.
Okay. Start off with carrying value at beginning. And then afterwards, we have a cost price. And then you have your accumulated depreciation. Okay, so looking at our question paper, we can say that the beginning of the year is 8 January, which of the, is it 8, which is here, where you have the balance on the first of 460,000. That's your cost price, because remember on vehicle or whatever asset we have in the business, it's always recorded at cost price. So which means our balance at the beginning for cost price will be that 460,000 right here. That's the one that you put in your cost price, 460,000. And then accumulated depreciation is the same thing. You go to accumulated depreciation, at which accumulated depreciation has a credit balance. So our balance at the beginning would be on the credit side, which is that one of 175,000. You record it in brackets, 175,000. Then you subtract the 2 to get your carrying value at the beginning. Do we all see that?
Yes.
Okay, so how much do you get if you punch that in your calculator? And you guys did not do this activity, and you know that today is our last class. So if you say 460,000 minus 175,000, how much do you get?
285,000.
285,000. That's your carrying value at the beginning. And then afterwards, we need to now check, do we have any additions or did we buy a vehicle during that year? So we go back to our T account. We see that on the debit side of vehicles, we have two amounts that are there, which one we bought cash and then the other one might be on credit. So which means we bought two vehicles during that year. Because if you can have a look, at the beginning of the year, we had 460. And then on the 31st of March, we bought a vehicle for 120,000. And then on the 1st of August, we bought another vehicle for 70,000. So you record additions. And then you open your brackets, you say 120,000 plus 70,000. If you add the two, how much will you get? $120 plus 70, that's $190, right?
190, yeah.
Okay. And then after that, we go to disposals, at which you know disposals, we need to record the carrying, the cost price and also the accumulated depreciation. So we come back to our T account. We figure out, okay, let's look at the vehicle. On the credit side of vehicle, it shows that we sold an asset, which was worth how much? Do you see that?
Yes.
Which is 100,000. Do you all agree? That's our cost price. And then now we need to figure out the accumulated depreciation. And one thing that I want you to notice, if you can recall from the notes or the steps that I gave you on asset realization, the first thing, what debit asset realization, credit what? The asset being sold. And you can see on vehicle what the credit realization. You can see once you understand the steps, it's very much easier for you to do a PPE and very much easier for you to calculate depreciation, because those steps they explain everything that you need to do in order for you to do your depreciation, do your asset realization, and also do your PPE. Because now, for example, we know that when on step number 2, we say we need to check when was the asset bought and when was it sold. Was the depreciation calculated up to date of sale? If not, you calculate. And then we say you need to what? Credit asset realization and debit accumulated depreciation, at which if you go to your debit side of accumulated depreciation, there you go. You have the asset realization on vehicles, which is the 65,000. Which means on the credit side of asset realization, they wrote accumulated depreciation on vehicle and put this amount. You see, everything just follows in order. That's why you need to go through those steps that I gave you. Once you go through them, PPE is very easy for you to do. So here it seems like everything was done for you. The asset was calculated up to date of sale. All you're doing is just you figuring out what goes where and taking that amount and putting it where it belongs. So here we know that the accumulated depreciation for the asset that was sold is now 65,000. Then if you say 100 minus 65, how much do you get? Hundred minus 65, how much do you get?
35.
35. You record it in brackets because it's an asset that was sold. So you record 35,000 in brackets. Do you have any questions so far?
No.
Okay. If there are no questions, then we proceed to what? The depreciation of the year. So depreciation of the year. Of the year. And the nice part about this question also, it was calculated for you. Go to your credit side of accumulated depreciation. You can see these two amounts of depreciation, the 5,000 and the 48,000. It was already calculated for you. There was nothing much that you had to do, but to see which amount is going where. So you got depreciation, you open a bracket, you show where you got those amounts. You say 5,000 plus 48,000. How much do you get if you add the two?
$53,000.
53,000. It's also in brackets because it's a negative figure, 53,000. And then after having recorded your depreciation, we come off, we record our carrying value at the end. Carrying value at end. And then in which you have your cost price. And then you have your accumulated depreciation at the end. Okay. So our cost price now is going to change. We go back to our T account. They told us the balance at the end is how much for vehicles? Do we all see that? Yes. So you take that 550,000, you record it on the cost price, 550,000, and then you go back. We check for what accumulated depreciation. We check the balance at the end also, which is on the credit side.
162.
163, you come and then you record it in brackets, 163,000. And then if you say 550 minus 163, how much do you get?
Mm, 387.
387,000. And then you're done with your PPE. There it is. You see, there's nothing challenging about it. Just if you go through the notes and steps of asset realization, they actually give you a more briefer way when you're dealing with the PPE, because you can see all the steps that we took when they give us this T accounts is the steps that we use when you're dealing with asset realization. Step number 1, transfer the cost price of the asset sold to the asset realization account by debiting asset realization and crediting what? Vehicles or the asset that was sold, which that is exactly what they did here. Second step, check if depreciation for the asset being sold is calculated up to date of sale. If not, you calculate. After that, you transfer the accumulated depreciation of that asset to the asset realization. By what? By debiting accumulated depreciation, which is what they did here, and then crediting asset realization, which is what they did right here. Third step, how did we sell the asset? Was it a trade-in or did we sell it for cash? This is where your disposals comes in. And then the fourth step is the profit. But now with the third and fourth, it doesn't really matter because we're not doing the asset realization. But the first two steps, they help you also understand and do the PPE. Do you all understand? Do we all understand?
Yes.
Yes.
Okay. If we all understand, then that means we're done for today. Is there anyone with a question?
So far everything we covered in the videos is enough for this module.
Yes.
Okay.
Everything covered is right there. The bank recon, the PPE, the asset realization, the VAT, what else? And the what you call this changes in equity we did when we did the bank recon, that's basically about it.
Okay. And the general journals? Are they important?
General,
I think she's
I
talking
haven't
about
seen a
the
question
trade
on
receivable.
the what?
The trade receivables control account. I think she's talking about those ones.
Or are you talking about the trade receivables account?
Wasn't there an assignment that had general journals? I'm not sure which one.
General, no, I don't remember.
Okay, no, then that's fine.
Okay, because the one that I'm trying to recall was the one whereby they told you that we bought a vehicle. It was actually about VAT. that you bought a vehicle and then the amount that they gave us, and then they said it was VAT inclusive, and now you had to record it on a VAT account, either if it was VAT input or VAT out, whereby you debit the asset that you bought and crediting the VAT that you. I think I sent a video on that class. If you're talking about that one, it should be like the second or third class that we did. Because I think it was either assignment 1 or 2.
Okay. And then don't you have like a previous question paper, like a recent one?
Okay. The thing with this one now, since it's now online, it's a bit challenging to get the question paper itself. Because remember, even when you guys are doing the exam, it will maybe the first page it has 2 questions, and then the next page has 3 questions. So it's not like one thing that's compiled all together that you can maybe download as other written exams and stuff.
Okay. Okay. No, that's fine from my side.
But just try. Okay, just revise, and I'm here wherever you're not understanding. Send a message in the group, and I'll respond to you. And also, if there's someone who knows the answer to the question that the other student asked, you just help them out. And then if not, then I'll respond to everyone.